Hello, trading is closed on April 9th, 2018. My last call on after Friday's close, the higher prices should print. This was the target, and that's this red line that worked. During the day, MEJT said these moves would retrace, and it says this move should retrace as well. If we gap sharply in the undesired direction, which is down, that's probably out of reach. If not, far away as it seems, that's the target most likely to print tomorrow. We have mixed signals for tomorrow's trade. We gapped up at a series of higher highs, couldn't close over any of them, and what's really negative is that we closed under the early low. That's a very negative pattern, leads to lower prices unless we invalidate the pattern by capping up sharply and promptly taking out this high. Well, that's the negative part. There's actually a lot positive about the pattern. We've dropped for 2 days. We dropped for 2 days straight, and we cannot take out any of these prior lows. This drop was right to a Fibonacci support level. Of 23.6 on the nose. We also have a wall into the close. Tends to be met by gapping up. We also have a big drop in response to a news announcement about the president's attorney. The rule for moves in response to news announcements is they should get reversed promptly and completely. Throw in the fact that tomorrow's pattern typically is bullish with an early low and a late high. And if we can just avoid gapping down sharply, the odds favor an up day and probably a strongly up day. When you have mixed signals, the commonest thing is we gap and promptly move outside the day's range. Next most common is we close little change. Have the big move the day afterwards. That'll have to be the call officially. But if we gap up smartly, that's the target. Unless we gap down smartly, frankly, that's the target. And I'd be particularly alert if, unlikely as it seems, if we gapped over these highs. If we gapped over these highs, we should rally all day long. But that might be the end of the party. If this count is correct, and that's the end of the first wave down, this could be A, this could be B, and the C is equal to A, and if we stop right here, which is likely, somewhere in the mid to high 2070s, the ABC up could be completed, and then the deluge down. So tomorrow the open should tell the story. Most likely as we gap outside the day's range. If we're down, let's not forget the big drop is coming. Let's not try to be a hero. I think it's more likely the gap's up. And if it's up strongly enough over these highs, it doesn't have to be. If that's what it is, it should rally all day long. If we don't gap smartly one way or the other, probably won't change much and have the big move on Wednesday. That's the target. That's the call.